Good morning, everyone. Welcome to the Quantum Leap Futures Morning Leap session for Wednesday, June the 15th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market macro to micro, take a look at the structure of the market, drill down to the trade levels, the targets, and the hypothesis for the day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, yesterday our Hypo 1 was a open auction out of range, a move up into test the range low through to the 73 area, find initiative sellers, then rotate back out through and down through the 68.75 and down into our main targets below, which were the 55.75 and the daily ATR downside target at 52 and 52 and a quarter as that CHVN. Beautiful trade yesterday. It was perfect. Then we rotated. We found responsive buyers down here, rotated back up, put in a higher low, and then rotated right back up into the 66 area, right by the naked VPOC, put in a Mr. Sneaky, rotated back down, got all the way down to the 57 and a quarter, and then rotated, rejected the VWAP, came back down to the 54.75, put a weak low in at 54.75, and then rallied into the close and closed at 20.66 and a quarter. So Hypo 1 was definitely in play, and then Hypo 2 started coming in later in the afternoon. All right, so taking a look at the news right now, we had manufacturing sales and PPI and core PPI and Empire State Manufacturing. They all came in better than expected, and we didn't really get anything on the market, just market stayed flat. Probably most likely because of the fact that we've got the FOMC statement coming out at 2 o'clock with federal funds rate, and then the Yellen press conference. So most likely this market's going to find some balance coming in. We do have German Buba, President Weidman speaking. We've got crude inventories at 10:30, and so there's a ton of, and we've got capitalized utilization and industrial production at 9:15. So we've got news pretty much through most of the morning and into the afternoon, but of course it will all be about the FOMC statement and what Yellen says in the press conference. I think the press conference is going to be more important than the statement, because we all know there's very little chance that they're going to raise the rate. So more likely it's what Yellen says about it that's going to cause the market to move. Each morning I like to take a look at the macro to the micro. I do that using a candlestick chart, a 9 EMA and a 20 SMA, and I start with the monthly and I start working my way down. What I'm doing is I'm looking at where are we within the trend of the different time frames. You can see a beautiful trend for the last several years. Take it back and challenge it on the end of 2015. Take it back into the end of 2015. Challenge it in December, and then fail in January and February, take it back in March, and so far in April, May, and June, we're able to hold above the 9 and the 20 and look for continuation to the upside. Our 20 and 9 moving averages are sitting both down at that 2042 level. That is an all-important level to us on the composite as well. Going to the weekly, we've got this upward trend starting, but we did challenge it yesterday, although we did rally into the close. Our 9 EMA is sitting at 2068. That's going to be a key line for us today for several different reasons. We've lost a little bit of slope, a little bit of separation, but the trend is still intact on the weekly. On the daily, we have rolled over and we're now below the 9 and the 20, and we're coming into a possible moving average cross here, or at least a hug. We do have that naked cross down here still at 2048 on the daily. Make sure that's in your journal as a target. It is now in play since we are below the 9 and the 20. That's our next key target below at 2048. Going to the 4-hour, you can see that we've had this strong downward trend after gapping down on Sunday night, and this is why we don't play the gap on Sunday night, because a lot of times these gaps do not get closed. We have strong slope and separation, but in the last 4 hours we've challenged the trend and gotten above the 9 and the 20, and we're holding the 9 right now, and that's at 2068 and a quarter as well. The 20 is up at 2074 above that 2073, which is our key line in the sand above us. But the trend is being challenged right now to the downside on the 4-hour. On the 1-hour, you can see that we had the strong trend down. Now we're rolled over, and we created this technical gap, closed the technical gap. We're trading just above the 9 right now, but we've got slope and separation to the upside, so we have a possibility of an upward trend starting on the 1-hour. On the 30-minute, you've got upward slope and separation, but we're losing some slope and separation, and we're challenging it right now. We're below the 9. The 2068 is the 20 SMA on this one as well. So again, there's that 2068 and a quarter. Going to the 15-minute, you can see we're in consolidation, and we've challenged the upward trend, and we're below the 9 and the 20 right now, and just going sideways with possibility of a start of a downward trend on the 15-minute. And then on the 5-minute, same thing, consolidation below the 9 and 20, possible start of a downward trend. Going to the structure, we clearly had a day where we gapped down, tried to went up and closed the gap, and then sold off again. Again, I point out that this is a possible island top here. 3-day island top. We've moved down. We're back inside of the value area, the longer-term value area that runs from March 17th through to the breakout day that we were using for a profile yesterday of the 24th of May. We're currently trading just below the 73. Surprise, surprise, we're actually going to open up in the upward distribution and possibly at the upside of the range from the prior day. The last few days we've been opening up below. So our key line in the sand above still remains the same at 73. If we get above 73, I'm looking for a push up into 76.50 and the 78, 79 area, with the next big destination above us right now at where they tried to hold value in the last 2 days in these wicks here at the 2081 and a quarter, and then 85 above it. The overall microcomposite of the value area that we just fell out of is at 79. Inside of the value area that runs from the 72.50 down to the 15 is we've got this undetermined fair value, this distribution zone with the undetermined fair value at 2068.75, 52.50, 42, and the 31 and a quarter. And I'm using 34.75 as a key support now, since we put or key support, because that'll put us at the bottom of the price acceptance around that 42, and if we can blow it, I'm looking for 31, but really I'm looking for a move down towards the 15s. I expect us to chop around in this area quite a bit once we get in here as we mature the auction in this area. Okay, so let's take a look at what's happened overnight. Overnight, we've opened up, in range, in value of the RTH session. They took it down to the 59.75, could not get to that double bottom down at 54.75, rotated it back up and challenged the range high, tried to break out, failed to break out, and we're chopping around in this upper distribution of a double distribution overnight with the surprise, 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 the LVN at 2068 and a quarter, the VWAP at 2068 and a quarter, and our key line in the sand for us this morning below us. So we've got 68 and a quarter and 73. We're in this upper distribution. Inventory overnight is net positive, and if we get below the 68, the longs could be challenged, and we could get a move back down into the lower distribution from yesterday and chop around in this area and try to take out this this weak low. All right, so let's move our numbers over. Our overnight high is at 73 and a quarter. Our overnight low at 59.75. For once, we don't have to worry about whether or not we're going to put a new high or low in. At least I don't think we will. And our VPOC is not going to shift. It's going to be at our previous key line in the sand at 69.75. And we've got that LVN at 68 and a quarter. And that 68 and a quarter is just above the value area, just below the prior day range low at 68.75. So I'm going to put my trade level that encompasses the 67.75 and 68.75, and I don't want to be long until I'm above 68.75. I don't want to be short until we're below 67.75. And that's about it that I have for the overnight session, so I can get rid of that. I can move this open and take a look at what we've got. Well, obviously, we're going to open auction in range, probably slightly outside of value. Levels below us, we've got the 63 and a quarter, really 63.75 down to 62.75 between the midpoint, the VWAP, and the LVN that separates this upper distribution to this lower distribution. There is another LVN. We got a very toothy profile yesterday, and that's because we got back inside of this area, and therefore they don't really have strong magnets in terms of price acceptance because this is undetermined fair value. So this is where you get a lot of these toothy profiles, or what we call fugly profiles, and this is what they look like. We've got another LVN here at 62. So I do have to be careful, but I am going to use the 63 because I think below 63 will come down and test this IB low from the prior day, that 60, 50, 60 and a quarter area, and the overnight low. So I'm going to be using that as a target and a trade area at, actually I'm going to use it as just a target at 60. And then below it, we've got the value area low at the 58 and a quarter. Below that, the range low at 54.75, and then everything remains the same to the downside because we're in this area right here. So all these levels that we put in yesterday all still are very key levels. Our 20-day ATR continues to tighten even more. We're now down to a 20-period daily ATR at 1923, 19 and a quarter points. So based off of the overnight high that we put in at 73 and a quarter, take off the 19 and a quarter, and that puts us down as our daily ATR at 2054, and that's right at basically the range low from yesterday and that week low at 54.75. So likely if we come down and challenge the week low and get below the daily ATR downside target, we're likely to get ourselves into a trend day and a move down into that 42 area. Above us, same thing. All the numbers don't change. Our overnight low is at 59.75 plus the 19 and a quarter. That takes us up to 79. So our daily ATR is just below the naked VPOC at 79.50. This is pretty tight, and we're likely, as that daily ATR compresses, okay, that's coiling, and generally we're going to see a breakout day, and the fact that it's FOMC day, I'm expecting to get a larger rotation and get some type of a extreme day today, either back up into the prior value area that we just fell out of, or a move down towards that 42 area and chop around here. So what's my main hypothesis? My main hypothesis, because we are opening in the upper distribution and the thought process is we're not going to get a rate hike, is my hypo 1 is an open auction in range, a move down to test the 62, 63 area, possibly even the 58, 59 area, find responsive buyers, and then start working our way up towards that 73 area, chop around in the 73 area into the news, and then based on the news, get a late afternoon probe up into the 79 and possibly up into the 80s and 90s up here and back right inside of the balance, maybe even challenge the 21. So hypo 1 is open auction in range, a move down to find buyers, find responsive buyers between 62.75 and 58.75, and rotate up into the range high or just above the range high, chop around in this area into the news, and based on good news, a pop up into the 80s, if not 90s. Hypo 2 is an open auction in range, a move up, a failure to break out or a false breakout, find responsive sellers somewhere between 73 and 76, maybe even 79, and then rotate down with the sellers down through the range, chop around into the 58, 59 area until we get into news, and then based on good news, a pop up into the 70, back up into the 79, or based on bad news, a move down into the 42. So hypo 2 is an open auction in range, move up, false breakout, find responsive sellers, rotate down through, chop around 59 area, and then on bad news, push through down to 42. Hypo 3 is an open auction in range, chop around, fail to get out of range, come down and chop around between the 54 and 59 area, and then fail and get a continuation wave down into 42. It's kind of like hypo 2, but it's more aggressive, and we make the move early down to the range low and then push through down into 42, possibly even to the year open at 37.75. Hypo 4 is a open auction in range, a move up, chop around the upside between 73 and 76, and then get a continuation wave up into the 81 to 85 level, and then based on Fed news, they push through and move back up into the 2100s and up into the 2109 area and finish the repair and go back up into this area of the non-farm payroll scene of the crime. So those are my main hypotheses. Taking a look at the somebody could write those down and put them into the room. I'd appreciate it while I'm doing this. For those that don't want to attend this session. And right now we're sitting right on the Keltner center line, which is at 69.25. Our upper line, if we hold, is up at 75, so that takes us into the 76 area by the time we get there. Below the Keltner center line, move down to the lower line will take us down into that 62 and down into this trade level. I need to put this in as a key line in the sand, or this is a key trade area, you could call it that, because I really want to be long above the 68.75s and I want to be short below it. And then our key support level for the day is going to be this 54. That's our daily downside ATR target and key support. Because if we get below it, I think it's a move down to 42 in the cards right now. But the good thing is that overnight, they took it back. We're actually going to open above value and in the upper part of the prior day range. So we haven't seen that a lot, and that looks like we finally found some buyers down at the 54, even though we put in a weak low. So who knows? One level at a time, Marvin tells me. Taking a look at the liquidity coming into the market, nothing really to speak about. We've got some liquidity up here at 72 and 70 area, and then liquidity starts, in the 67-ish down to this 60 area. But pretty light board so far. And we're probably going to have some light volume coming into the Fed. Just take a quick look at gold. Gold continues its move up. It's just never ending right now. We've now found some balance up here. That balance is around the 85.20 level. We're trading it right now. Watch the 82.20 below that. We'll look for the possibility of a pullback down to the 73 area. But I think gold's got itself hell-bent on testing the 1300s this week. We got as high as 1293. Next big target above it is 1296.90, but the key level is going to be that 1300. And if we get back up into the 1300, look for a rule of 10 and it push through to the other side of this balance around 1303.50 up into the 1312. Anything above 1312, and we're continuing to push through, and I'd expect to come up into the 1326.60 area. Heck of a strong gold market. I wish I would have stayed in that long I was in, but I didn't, so I'll just gripe about it a bit. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.